Hi everyone, Michael here. In this video, we're going to be discussing, are we at the peak of this real estate market? How much longer can the boom last? And I'm also going to go over a disaster that's happening in the home construction sector that is going to end in tears for many first home buyers and repeat home buyers that are building brand new homes right now. So as you're all aware, right now, house prices are booming. People are paying ridiculous amounts just to secure a home, 10 to 20%, sometimes even 30% over the asking price or over the reserve at auction. But myself and many experts are saying that this is unsustainable and we could be getting very close to the peak. But what you have to know is with the real estate market and with how they report the data, is they always report the data about 3 months after the actual price increases. So what's going to happen is when we hit the peak and when the data starts to show us that prices are starting to decline, that will already be 3 months after the actual decline start. So if you're in the market and looking to buy a home or looking to sell a home or just browsing and figuring out if you're ever going to be able to afford a home, what you need to do is actually look at the listings, go to open for inspections, go for auctions to see what the live sales results are, because by the time we get the headlines, house prices start falling. Like I said, it'll already be too late. Okay, let's get into it. So first things first, why is it such a seller's market right now? According to Realtor.com, housing inventory fell 39.6% in 2020. This, along with increased demand from artificially low interest rates from the Federal Reserve dropping their cash rate to zero, and mortgages hit a low of 2.65% in the US. In Australia, the RBA dropped the cash rate to 0.1%, and we now have 3-year fixed rate mortgages at 1.79%. And the same thing's happening in Canada and the UK as well. Shout out to all my viewers in Canada and the UK. I know a lot of you are starting to tune in as well. And a few big problems that's reducing the supply. Well, first thing is a lot of people that might want to sell their home right now, they're worried that they might not be able to get a house if they sell their house because it's so competitive right now. So that's just making the supply side of things even worse. Not to mention, like I said, if they want to buy another house right now, they'll have to pay 10, 20, maybe even 30% above asking price. And that's going to lead to big risk for individuals down the track and what could put them in negative equity, but I'll get into that later. Plus what happened in 2020 is we had the pandemic, so nobody wanted people coming through their homes and potentially exposing them to the illness. And also in the US, you'd think there'd be a bunch of construction starts with the artificially low interest rates, and this would solve the problem, adding more supply. And what they really need to do in order to fix housing affordability is cut the red tape, cut all the planning things, and let them add more supply onto the market. But many homeowners don't want this happening because if they build a bunch of apartments around their home, it could affect their property value. But what's happening in Australia is we are having a construction boom with the 25k home builder grant, but some new revelations with the home builder grant that came out today is going to shock you, and I'll get into that later, about there's going to be a rude shock for all these people that sign up for this home builder scheme thinking they're going to get the 25k and maybe they won't end up getting it. And something that's interesting that's happening in the US is banks are now starting to get very, very picky with who they choose to get a loan, and it's now starting to get a bit harder to get a loan. So that's going to reduce demand because the banks are now starting to only pick the best of the best to give a home loan to, and they're wanting a bigger deposit down. So this means there's going to be more people not being able to qualify for the loans now because the banks have so much demand they can be picky. And maybe the banks are doing this because they do see a housing crash coming early next year, and this is going to lead to many first home buyers or potential home buyers leaving the market. But sellers are now starting to see these awesome sales results, and then they'll start putting their home on the market, which should fix this supply demand issue and start cooling the housing market. But how do you know if you're buying at the bottom of the market, and how do you know if you're buying at the top of the market? Well, firstly, what normally happens when you buy at the bottom of the market, there's 4 stages in the real estate cycle. Put simply, first is the recession phase of the cycle. It's followed by the recovery phase, the expansion phase, and then lastly, the hyper supply phase. At the first stage in the real estate market, the recession stage, and as it slowly starts to transition into the recovery phase, prices are at their lowest and foreclosures and evictions are at their highest. And that usually signals we're at the bottom of the housing market, like what happened in 2012. But the weird thing about this recession is it wasn't used to other recessions that was caused by a financial issue or by banks going down like what happened in 2008. It was caused by a pandemic. And normally in a recession, prices should be going down. And it's now been a year since we entered into a global recession, and this is when prices should start dropping and getting close to their bottoms. But what's happening now is we're having high real estate prices in a recession, which means house prices are unrealistic and we're entering into one of the biggest housing bubbles in history. Normally, house prices increase when job growth increases and GDP increases, but the only thing that's fueling this housing market is the crazy amount of low supply and record low interest rates. But interest rates are now starting to go up, and I do think supply is going to start increasing in the second half of this year due to the improvement in the pandemic and people may be more comfortable with other people coming through their home, and also other people seeing the awesome gains they have, and people are going to get greedy, say, oh, my neighbor sold his house and he made 500k profit, maybe I need 500k right now and I'll sell my house. So how do you know if we're at the top of the real estate market? Well, normally if prices go up because of strong jobs growth, GDP growth, everything's booming in the economy, then it's a sign we're not at the top. But according to this Forbes article here, if house prices are at their highest just purely because of low supply and when interest rates are at their lowest levels in history, that's a sign that we're at the top. And just to give you a real world example, this happened in my hometown. The median house price was around $375,000 to $400,000. But because supply was so low, you couldn't get a new 4-bedroom house below $475,000. So what happened in that market in my local areas, people were paying $475,000 to get their home purely because there was no other choice. They had to overpay. But then what happened is there was a big construction boom in the area, a bunch of supply got added, FOMO got taken out of the market, and now you can get a 4-bedroom house in that area for $375,000. But you know what happened? In the housing market data, it said prices only dropped 5%. And that's because people were overpaying for property by 20 to 30% because of low supply. So even if next year, for example, the housing data says house prices just drop 5%, look how resilient they are. The housing market didn't crash. Well, if you're a person buying now and you're having to pay 30% over asking price and prices drop 5% and there's no more FOMO, well, really, your house is only worth what people are willing to offer. So now an appraiser may come out to your house and there may be a sale down your street and the price may be 30% below what you paid for. So even if the data doesn't say there's a housing market crash, your property value, what you paid for, could drop dramatically. And have a listen to this. Commercial and investment real estate have an additional factor. If you are paying price that currently does not even come close to giving you a cash on cash return, then you are almost certainly a candidate of buying at the top of the real estate market. And what has happened to yields for real estate investment right now? Yields have plummeted. Not to mention, a lot of landlords are leaving the real estate market because the government keeps on intervening and saying what you can and can't do with your investment. So people are like, yo, stuff this, I'm just gonna go on the stock market and collect dividends and not have to deal with tenants and deal with the government saying you can't evict your tenant because they didn't pay rent. And hey, look, I know some people do need help, but there's a lot of mum and dad investors that are in a lot of pain right now. So what I'm saying is it looks like we are getting very, very close to the top in this real estate market, and it's just a matter of time before more inventory comes on the market to cool the market, and interest rates are rising. And in the US, banks are getting a bit more stricter on their lending standards. So that may be a sign that they think a correction is coming and they don't want to be left holding the bag. Now, like I was saying earlier in the video, a huge risk I think that's happening in the house and land market right now and in the new builds market is developers, they're not always honest, they don't always have the best integrity, and in housing booms, they always overcharge and take advantage of buyers. And what's happening right now, land prices are skyrocketing because people aren't able to get an existing home, so now they're saying, okay, I'll go build. But remember, when you buy land off a developer, it's not exactly market value. And again, I built this house in a new development, and what happened is luckily I bought the land for 135k 2 years before the land titled. But just before the land did title and the bank was going to come out and value it, I was looking at what the land lots were selling for in the same development, the exact same lot as me, the exact same size and position as my lot. They were selling for $200,000, but when the bank came to value my lot, it was only worth $150,000 at the time. So that means people that were buying the lots of land at that time were paying nearly 30% over market value to secure that lot of land to build their dream home, have the big dream. And that means when the bank comes to value it, they could say, look, you've put this amount of deposit down. Unfortunately, you've paid 200,000. The land's only worth 150,000. You're gonna have to find the $50,000 to make up the difference. And I've seen this happen time and time again. Every bull cycle in the housing market, developers come out and they take advantage of the FOMO and they put a huge premium on these house and land packages. And that's another risk of home buyers entering negative equity and a potential of more land sales coming onto the market next year. And have a look at this. For all my viewers in Australia, what happened in Australia is the government gave $25,000 for people to go out there and build their home. But look at this. First home buyers banking on the $25,000 or the $15,000 grant from the federal government home builder scheme could be left scrambling to make up the shortfall as warnings sound on delays in land registrations and buildings. So what they had to do is they had to start construction by a certain date, but now these lots aren't titling in time, and if it goes past that date, it means they're not going to get the $25,000 and they may not be able to make up the difference and lose their deposit or not be able to build. So everyone, I urge you, just calm down, just relax. Don't FOMO into this housing market and overpay 30% because next year you could be underwater. It is looking like we are getting very close to the peak, and again, like I said, we won't get that headlines until 3 months after it actually happens. So make sure you do your research and research your area, because the housing market isn't just one market. Every city has its own market and every suburb has its own market. For all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you all up to date on the latest housing market and global finance news. And if you're bored, I'll put up some other videos here. I'll see you there.